Yesterday we have completed discussion of first chapter, right? We have seen basic introduction. We have seen what is the meaning of audit, and we have also seen the importance of independence, and we have seen various types of standards that have been issued by the institute, right? So all the basic discussion with respect to audit is being discussed in first chapter, right? Now if you find that the screen is not visible, or if my image is blank, you please inform me. Okay, yeah. So now in the today's class we'll be starting with second chapter, and the weightage of this second chapter, it would be for 3 to 4 marks. Okay, 3 to 4 marks, and the name of this chapter would be ethics and terms of audit engagement. Just like in the previous chapter we have discussed with the help of PPT, after that we have gone through the concept book, right? In the same manner we will be discussing even this chapter also. Okay, now let me open the PPT. So in the previous class we have discussed essay 200, right? But we have not discussed complete essay 200. Only the first part of essay 200, which deals with objectives of auditor, is done. Still we need to discuss the fundamental principles of the auditor. That fundamental principles we will be covering here in this second chapter. Okay, apart from that we will also be discussing essay 210 here in this second chapter. Okay, essay 210 deals with audit engagement letter. Okay, those aspects will be covering here in this second chapter. Now if you observe the name of the chapter, yeah. So here if you observe the name of the chapter, the first thing it says is ethics. Now we should understand what is meant by ethics. What is the general meaning of ethics as per your knowledge? Okay, see, ethics means the general example. You are going on a road, you found a wallet, somebody's wallet on the road, and in that wallet there is some amount, and apart from amount there is also the identity of the person to whom that wallet belongs. Now if you are an ethical person, what should you do? You should return it, right? That is simple thing. Now just like for the normal human beings, there are certain ethics, that ethical principles that should be followed. Even for chartered accountants also, the institute means our ICAI has prescribed certain ethical principles that has to be followed. In the first class itself I have told you about code of ethics. Do you remember? ICAI has issued code of ethics, right? Now in that code of ethics, the entire principles that has to be followed by a chartered accountant are present. If you see in our ICAI website you can find code of ethics. It will be of 3 volumes. Okay, this much size of books, 3 books it will be there. So that many principles, that many ethical values you need to follow. If you see in your in CA final, there will be a chapter by name professional ethics, which will be for 20 marks in the CA final. In that entire professional ethics chapter, the discussion will be with respect to that code of ethics only. But here at CA inter level, we will not be discussing complete code of ethics. We will be just discussing the 5 fundamental principles which are common in both SA 200 also. The discussion with respect to fundamental principles is made, and even in code of ethics also discussion with respect to fundamental principles is made. Okay, if you remember, I have already told you this point, that this is discussed in 2 areas. One is SA 200 and another one is code of ethics. So that will be the first aspect that will be covered in this chapter. And the second aspect that will be covered is terms of engagement. Now engagement means, we have already discussed what is meant by an engagement. Any work that you accept from a client, you can call it as engagement. Now for each and every engagement, there will be certain terms and conditions, right? So you have to write down what are the terms and conditions of the engagement. So specifically in this chapter, we will be discussing about terms and engagement for audit. Okay, in case of audit engagement, what are the terms and conditions that has to be written down in the engagement letter? Technically we call that agreement between the auditor and the client as engagement letter. Okay, so what should be the format of engagement letter, what should be the contents of the engagement letter, all those aspects we will be covering in this chapter, which is SA 210. Got it? So this is a brief idea of what we are going to cover here. Now so ethics, let us see we have generally discussed what is meant by ethics. Now we'll see what is the technical definition of ethics. See, ethics means moral principles which govern a person's behavior. Okay, each person, the behavior of each person will be governed by his own ethics, right? In the example that I have discussed, if you find a wallet, one person might return it, that is his ethics. Another person, he might not return it, right? So the behavior, how the person behaves, will be governed by the ethical values he has, right? Apart from that, I'll also be giving you another example with respect to ethics. Okay, next, it is a state of mind to act and perform in accordance with moral principles. Okay, here if you see in this definition of the term ethics, the key term is moral principles. Okay, if at all in examination you are quoting about ethics, this word should be there in your answer, that ethics means moral principle that will govern a person's behavior. Got it? Any doubt with respect to this? Now example for ethics. Each and every profession should follow certain ethics. We call them as professional ethics. Not only the profession of chartered accountancy, each and every profession will have their own ethics. Okay, doctors, they will be having their own ethics. Lawyers, they will be having their own ethics. Similarly, let's say for example, there is a policeman. He also will have his own ethics, right? He should properly punish the criminal, right? He should not catch hold of a person who has not committed any crime, right? And he should not accept any bribe, that is his ethics, right? And he should comply with law and regulation. Okay, so these are the ethics that the policeman should have. Like this, each and every profession will have their own ethics. Similarly, our chartered accountancy profession also has certain ethics. Okay, who has issued ethics for us? ICA has issued ethics in the form of code of ethics, right? So code of ethics for CAs. Chartered accountants must comply with these code of ethics. See, ICAI has issued these code of ethics, and it is not that if you want you can comply with this, otherwise you can take them light. No, you have to mandatorily comply with the ethical requirements that has been issued by the ICAI. You can ask a doubt, sir, what will happen if we don't comply with ethics? ICAI will punish you. There is a disciplinary mechanism in the ICAI. As per this disciplinary mechanism, there is a separate body created for taking action against the chartered accountants who don't comply with ethics, who don't comply with laws. Okay, so there is a disciplinary mechanism. As per the disciplinary mechanism, you will be punished if you don't follow ethics. So how you will be punished, how much will be the penalty, all those things, they are not there for our syllabus. You will discuss them in the CA final level. Okay, but as of now it is sufficient to just know that if you don't follow, there is a disciplinary mechanism for that. Okay, yeah. So our ICAI, this is the new logo of ICAI, which has issued on occasion of 75 years completion of ICAI. Do you have idea about this logo? So ICAI issued code of ethics for whom? For chartered accountants. Okay, next, now for these ethics there are two approaches. Okay, we'll call them as a principle based approach and rule based approach. See, it is being said that you have to comply with the ethics. Now, complying with ethics can be done in two ways. One is principle based approach and another one is rule based approach. What is the difference between these two? Let's see. Let's see the difference between these two. So, first of all, let me tell you example for the difference between these two. Now, in the previous classes, we have discussed that chartered accountant, he must be independent, right? Now, if chartered accountant accepts any gift from the client, can he continue to be independent? No, right? But let's say there is a CA firm. Mhm. No, whether the amount is small or large, gift is gift, right? So, as per the principle or as per the rules that a particular chartered accountant firm has placed, it is said that the partners of this firm can accept gift up to 2000 rupees from the client. Okay, so from firm to firm the rules can vary. Okay, so a particular chartered accountant firm, just for example, has placed a rule that our partners, they can accept gift up to 2000 rupees. Okay, now this is a rule, or you can say ethical requirement from the perspective of the firm that has to be followed. Now, as I have just now I have told you, whether gift is small amount or large amount, gift is gift, right? You will lose your independence. Now, a particular partner of this firm, Mr. A, is doing audit of Z Limited. Now, Z Limited, it wanted to gift Mr. A watch, and the value of that watch is just 1500 rupees. Okay, now if Mr. A goes as per principle based approach, so what is the core principle? The core principle is you must maintain independence, right? So here, if Mr. A goes by principle based approach, he will think that even though the gift is small or large, and even though my firm allows to take gift up to 2000, by accepting this gift I will lose my independence, so I will not accept this gift. Okay, so this is how Mr. A will think if he goes by principle based approach. Okay, whatever the rule might be saying, but he wanted to comply with the underlying principle. What is the underlying principle? Independence. Okay, now if Mr. A goes by rules based approach, now as per the rule, what is the rule? You can, no, the rule of the firm is you can take up to 2000. So since the amount is less than 2000, he will accept the gift. Got it? Any doubt? No doubt, right? So this is how, see, this is just the way in which you think. Okay, the way in which you follow the ethics. Okay, there are two ways for following it. One is principle based and rule based. If you didn't understand, I'll also give another example in the next slide. Okay, now chartered accountant must comply with this code of ethics and the principle based approach. As per the principle based approach, this approach requires compliance with spirit of ethics. Okay, so as per principle based approach, the idea would be to comply with the spirit of ethics, whatever the rule might be saying, and it requires accountants to exercise professional judgment. Okay, in the example that we have discussed, he has exercised his professional judgment. As per his professional judgment, he thought that even though the firm allows the value up to 2000, if the gift, whether it is huge or small, gift is a gift and I will lose my independence. Like this he thought based on his professional judgment, so he didn't accepted the gift. Okay, so in case of principle based approach, you have to apply your professional judgment. What is meant by judgment? No, you will take judgment based on your experience, your knowledge, right? Based on all those aspects, the judgment will depend, right? Next, rule based approach. In case of rule based approach, you will strictly follow the rule. Got it? You have to strictly follow clearly established rules. It may lead to a narrow outlook and spirit of ethics. Okay, in case of rule based approach, you need not apply your professional judgment. You will just follow whatever the rule is saying. Got it? If it's done, I'll go to next slide. Yeah. Shall I go? Now, another example for principle based approach versus the rule based approach. Now, there is a chartered accountant, okay, that is auditor, and auditor wants to obtain audit evidence with respect to existence of inventory. Now, in the financial statements, there will be closing stock, right? You need to obtain audit evidence with respect to closing stock. What audit procedure you will perform to obtain audit evidence with respect to closing stock? Hmm? That is, there is a specific term for that. Physical verification, or you call it as inventory verification. So, you will physically visit the location where the inventory is present and you will verify that inventory. That is the procedure that you will perform for verification of inventory, right? Now, generally the inventory verification, it will be done at the end of the year by the auditor, that is 31st March of the so and so year, because as on that date only financial statements will be prepared and auditor need to certify those financial statements that are prepared on 31st March, right? Now, here on 31st March, let's say the value of inventory in the books of accounts is 1 crore rupees. Now, he needs to visit the location of the entity where the inventory is stored on 31st March, right? This is the rule. Got it? For physical verification. Now, suddenly on 31st March, there is a huge rain and auditor is unable to visit the location for doing physical inventory. Okay, it is quite impossible. Okay, huge rain, the entire area is flooded with water. Now, in this situation, if you go by principle based approach, that is, you will apply your professional judgment. See, the core requirement or the core principle is, I need to obtain audit evidence of the inventory that is present as on 31st March. Now, for obtaining audit evidence as on 31st March, what I can do is, instead of visiting on 31st March, what I can do is, I can visit the location on, let's say for example, 4th April. Okay, after entire rain is got completed, after the flood is completed, on 4th April I have visited and I will verify inventory that is present as on 4th April. Okay, now I got evidence with respect to inventory as on 4th April. Now, actually I need to obtain evidence as on 31st March, right? Now, what I will do, I will reconcile this inventory with the purchases and sales that has happened between 31st March and 4th April. Got it? By reconciling, I can arrive at the figure of inventory as on 31st March. Got it? Any doubt? Clear? So, by applying principle based approach, you have decided to obtain audit evidence in this manner instead of visiting as on 31st March. Now, for this same situation, if you apply rule based approach, the auditor will become monarch, he will become Balaya. Whatever the situation might be, I want to go on 31st March only, because rule is saying to go on 31st March. Got it? So this is the difference between principle based approach and rule based approach. Got it? Next, fundamental principles of professional ethics. There are 5 fundamental principles that has to be followed by the auditor. And who has issued these fundamental principles? Where? And also in 200, essay 200. Essay 210 speaks about engagement letter. Got it? Now, so the of the 5 fundamental principles, we will discuss one by one. The first fundamental principle is integrity. Now, what is meant by integrity? Integrity means being truthful. Okay, whatever the actual situation is, you have to report that only. Okay, so you should not manipulate, you should be straightforward. That is known as integrity. So integrity is the quality that the auditor should develop. Okay, auditor should not accept any engagement that lacks integrity. Let's say a client comes to you and asks you that, sir, our inventory balance is only 1 crore rupees, but for raising the loan, the banker is asking the inventory worth 5 crore rupees. You please certify that we are having inventory of 5 crore rupees. If you certify that, what will happen? It means that you have lost your integrity, right? You are not being truthful. Got it? Understood what is meant by integrity? See, accountant has to be straightforward and honest. He shall not knowingly be associated with the information that contains a materially false or misleading statement. So that is known as integrity. The first fundamental principle is integrity. Next fundamental principle. Shall I move to next slide? So the next fundamental principle is objectivity. What is meant by this objectivity? See, objectivity is related to decision making. You can make decision in 2 ways. One is objective manner, another one is subjective manner. Now, if you take decisions objectively, it means that you are taking decision based on facts. Okay, objectivity means taking decisions based on facts, whereas subjectivity means taking decisions based on emotions. Okay, that is the difference between objective decision making and subjective decision making. Now tell me, which will differ, which type of decision will differ from person to person, either objective decision or subjective decision? Subjective decision will differ from person to person, because subjective decision will be made based on the emotions. Emotions of the person will differ from person to person, whereas in case of objective decision, whoever might take the decision, he will take the decision based on facts. Facts will never change, right? So objective decision will never change from person to person. Got it? So objectivity means auditor not to compromise professional judgment because of bias. Okay, here professional judgment means the decision making of the auditor should not be compromised by the bias. Bias means showing favor to a particular party. Okay, your decision should not be biased. When your decision will not be biased? If you take decision based on facts, your decision will not be biased, right? If you take decision based on emotions, your decision will automatically be biased. It will be favored to any one of the party, right? And conflict of interest, okay, the decision that you make, it should not conflict interest of any of the parties, okay, it should be straight away, okay, based on the facts. Or undue influence of others, okay, while making any decision you should not get yourself influenced by any other person, okay, that is known as objectivity. Got it? Next principle, confidentiality. Okay, next principle, professional competence and due care. Now, what is professional competence? Competence means capability. Professional competence means professionally you should be capable. That means whatever the work do you accept, you should have the relevant knowledge to discharge that work. If you don't have the relevant knowledge to discharge that work, you should not accept that work, okay. So you should be professionally competent to discharge the work. If you are not professionally competent, you don't accept that work, or you make yourself professionally competent. That means you learn about that subject, you know everything about that, then you accept that engagement. That is known as a professional competence. Next, due care. Due care means simple, whatever the work you discharge, you have to do that work with utmost care, okay, with your 100% attention you have to do that work. That is known as due care. So understood what is professional competence and due care? See, an accountant to attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional services. Got it? Any doubt? So what are the first three fundamental principles that we have discussed? Integrity, objectivity, professional competence and due care. Next, the fourth fundamental principle is confidentiality. Now, what is meant by confidentiality? The general meaning that you know. To others, to third party. Okay. So, while doing the audit, you will have access to various confidential information of your client, right? Now, you should not disclose the confidential information of your client to any third party, right? So, that is known as a confidentiality. Okay. But however, there are certain exceptions to this confidentiality. What are the exceptions? Okay, let me first of all tell you the exceptions, after that you can note down. Okay, so what are the exceptions for this confidentiality? Yeah, to the government, that will be covered in the government itself. Authority, law, court, all these people, if required by law or regulation, you can disclose the information. That is the first exception. To the persons who appointed, for them already the access will be there. No, for them you cannot disclose the confidential information of the client. Client might be having certain patents that, no, for stakeholders also you should not disclose confidential information. See, normal financial information is different, confidential information is different. Okay, confidential information is like, let's say there is a pharmaceutical company. Now it will spend lot of amount on research and development of a particular drug. Now auditor, he might get access to that formula during his audit, might be he can get. Now if at all he got the access, he should not disclose, but he can disclose to in certain situations. The first one is law or regulation, like if there is any court case going on against the client and court has asked the auditor to disclose the confidential information of the client that is relevant for the purpose of case, then the auditor can disclose. Second exception, if client himself permitted the auditor to disclose, or auditor taken the permission of the client and the client said that okay, disclose it, no issue, this is the second exception in which you can disclose. Next, third exception, if there is a professional obligation on the auditor. What is meant by professional obligation? See, now the audit that the auditor conducts, it is not final. It will be again reviewed by various authorities. There are authorities like NFRA, National Financial Reporting Authority. There are authorities like peer review board, which has been constituted by our ICAI only. Now these people, they will review the audits that have been done by the auditor. In fact, from the last year onwards, this peer review has been made mandatory for all the audit firms in order to be eligible for bank audits. Okay, so in case of peer review, what happens is, for every 4 years or 5 years, the firm would have conducted all the various audit engagements, right? All those audit engagements, from those audit engagements, certain audit engagements will be taken up for peer review. That means another chartered accountant, okay, who is not part of this CA firm, will be appointed by ICAI as peer reviewer. Now he will come to this firm and he will verify all the documentation maintained by the firm with respect to that audit will be verified. Now as part of that review, if at all the confidential information of the client has to be revealed to the peer reviewer, it can be reviewed because there is a professional obligation on the auditor. Got it? So these are the three exceptions for confidentiality. Now you can write down. Done. Next fundamental principle, the final fundamental principle, which is professional behavior. What is meant by professional behavior? See, the auditor, he needs to behave professionally. That means behaving professionally means he should comply with whatever the laws and regulations are there. And if the institute asks for any information from the auditor, he has to furnish that information to the institute. Okay, and he should not behave unprofessionally, like example, you have drank and doing dance on the road. Okay, those type of unprofessional things should not be done. Okay, those things which will bring disrepute to the profession or to the institute, those type of things should not be done by chartered accountant, because we chartered accountants have certain respect in the society, right? We have to uphold that respect. If any chartered accountant does anything wrong, it doesn't affect only him, it will affect the entire profession. Okay, the people, the public will speak about entire profession, right? So the name of the profession, the respect of the profession will get damaged. So you should feel that your respect is respect of the profession, right? So you should behave professionally, that is a professional behavior. Okay, see, it requires an accountant to comply with relevant laws and regulations and avoid any conduct that accountant knows or should know might discredit the profession. Okay, you can note down. Now a question, the fourth principle we have discussed is confidentiality, right? Now chartered accountant, after he qualifies, he can go either for practice or for employment, right? Now should he maintain confidentiality both in employment and practice, or this confidentiality principle is applicable only for the practice? Both, right? Whether you go for employment or for practice, you have to maintain and you have to follow these fundamental principles. Not only confidentiality, the all other fundamental principles that we have discussed, you need to follow in both the situations. Okay, so these are the five fundamental principles. Now apart from these five fundamental principles, there is also one particular aspect that we have been discussing since from the class 1 onwards, that we are saying that auditor must follow that. What is that? Independence, right? So the discussion with respect to this independence is also made in the code of ethics and even in this essay 200. Okay, so whenever we speak about these five fundamental principles that we have discussed, even the independence also gets added, so we call it as fundamental principles including independence. Okay, so about the independence we have already discussed. There is nothing much left to discuss about independence, right? But still there is some content like threat to independence. In order to avoid that threat, what are the safeguards that you have to implement? Those are there for a discussion that we will discuss now with respect to independence. Okay, you know what is meant by independence, the meaning of independence, you know. But if any situation arises where your independence is at threat, how to overcome it? First of all, in what situations there can be a threat to your independence? We will discuss those threats to independence. Threat to independence means, what is meant by threat to independence? Yeah, the situation which makes you to lose the independence is known as threat to independence. There are five threats to independence. Those five threats to independence we'll discuss now. Okay, see, firstly, the independence. Independence implies that the judgment of a person is not subordinate to the wishes or direction of another person who might have engaged him. This you know. Now, okay, before discussing threats to independence, there are two perspectives to this independence. Okay, just like for complying with the fundamental principles, there are two approaches: principle based approach and rule based approach for the five fundamental principles. Even for the independence also, there are two perspectives for the independence. Okay, one is independence in mind, and the second one is independence in appearance. What is the difference between independence in mind and independence in appearance? Let's say, for example, independence in appearance. Now, the all the people that are seeing you, they should feel that you are independent of your client. Let's say Mr. A is a chartered accountant. He is auditing Z Limited. Now, Mr. A has not invested any amount in Z Limited. Okay, Mr. A is not having any relationship with Z Limited. So, just by seeing their relationship, you will come to a conclusion that Mr. A is independent of Z Limited. This is known as independence in appearance. Okay, next, independence in mind. Now, if we see, okay, everything is fine, he is independent, but actually Mr. A, in his mind, is he really independent? That is known as independence in mind. See, just by looking you can feel that he is independent, but the actual situation is Mr. A is being auditing this Z Limited for the past 20 years. Okay, for the past 20 years he has been auditing Z Limited. Now, if you have associated with a particular company or with a particular person for that many number of years, obviously you will develop a certain relationship with them, certain bond with them. Now, it depends based on his relationship whether Mr. A, in his mind, whether he is actually independent or not. Okay, that has to be checked by himself. Okay, so being a chartered accountant, it is not sufficient if you just appear to be independent. You have to be independent even in your mind also. Got it? These are the two perspectives for the independence. See, two perspectives of the independence. Firstly, independence of mind, that is the state of mind that permits the provision of opinion, the state of mind that permits provision of opinion without being affected by influences. That is independence in mind. Next, independence in appearance. Shall I move to next slide? Yeah, just a second. Let me check whether it is being recording or not. Because sometimes what happens is I'll be keep on speaking and I'll forget to on this recording button. Let me just check 1 second. Yeah, it is recording. Next, independence in appearance. That means avoidance of facts and circumstances that are so significant that third party would reasonably conclude a firm's or member of assurance team's integrity, objectivity, or professional skepticism has been compromised. Compromised means lost to some extent or lost completely. So it is not sufficient to just be independent in appearance. You should also be independence in mind also. Yeah, any doubt? Tell me. No problem, tell me. I'll explain you, it will come. Completed. In this chapter itself we'll discuss professional skepticism definition. Now, threats to independence. What is meant by a threat? As I've already told, any situation in which you might lose the independence is known as threat to independence, and there are 5 threats to the independence. What are these 5 threats? Let's see. First of all, threats are those aspects that prevent auditor from being independent, that is known as threat. Now, to remove the threat, see, if there is a threat to independence, you will keep it as it is. What you'll try to do? Yeah, you will try to either completely eliminate it or reduce it to a acceptable level. Okay, if you are not able to completely eliminate the threat, you will at least try to reduce it to a acceptable level by implementing safeguards. Okay, we will discuss what are those safeguards and how to eliminate the threats also. Can I move to next slide? So the first threat to independence, which is self interest threat. Self interest threat means, see, example, auditor has no auditor, he has invested in the shares of company. Now he will be interested in that company, right? Because he has invested in that company, he will always try to safeguard that company, try to show more profits in the company, try to cover up whatever the misstatements that the company has done, right? So in this manner he can get self interest threat. Okay, either he or any of his close relative has invested in the company, then also he will, you know, have this self interest threat, right? Another way in which self interest threat can occur. Now, client the auditor and the client, both of them together, they are doing some other business. Okay, for that other business some other person is auditor, but client and auditor and the client, both of them together they are doing some other business, that is they are having certain business relationship. Then also he will acquire certain self interest threat. Okay, these are some of the examples in which you can acquire self interest threat. Basically self interest threat will be created in the monetary form generally. Okay, see, self interest threats occur when an auditing firm, its partner or associate could benefit from a financial interest in an audit client. Another example, now your firm is having a certain 10 clients. Okay, and clients they will give you fees, right? Of these 10 clients, there is one particular client which is a huge company. Okay, now of the total fee you receive, okay, of the 100% of the total fee that your company receives from all the clients, 80% comes from that single large client only. Now in this situation, if you lose that client, you will lose 80% of your revenue. So in this situation also you are having certain self interest in the company, in that client, right? So these are some of the examples in which self interest threat can be created. Okay, see, direct financial interest. Direct financial interest means directly you have invested. Next, loan guarantee to or from the client. You have given a loan to the client, auditor has given a loan to the client. Then if client loses its reputation or client shows losses in its financial statements, and because of that the share price falls, it is a loss to the auditor because he has given a loan and the client might not repay the loan, right? Next, if client has given loan to the auditor, then also if the auditor will be having a fear that if he reports misstatement of the client, client might ask to repay the loan amount that the auditor has taken, right? So this also will create a self interest threat. Next, undue dependence on a client's fee. This example we have just now discussed, right? You are depending on the fee that a particular client is giving to you. Okay, of the total fee, 50 or 60% of the fee comes from a single client. That means you have dependent on that client for your fee or for the revenue of your firm. Got it? Next, close business relationship with the client. Okay, you and client are doing some other business, that will create a business relationship between you and the client. Okay, again a self interest threat will occur. Next, potential employment with the client. Now the client might have told you that, or you are having a brother and you wanted your brother to work in that company. Okay, your brother he is not getting any employment elsewhere, and client has told that okay, I will give employment to your brother. Now if auditor reports anything about the client, he might fear that the client might remove his brother from the employment, right? Or the client himself might client might remove the auditor himself, right? If auditor reports anything wrong about the client might say that I'll remove you from the employment as a auditor. However, being appointed as a auditor is not a employment. You are a professional being, appointed. You are a third party to the client. You are not a employee of the client. Might be he might have offered you the employment in future. Okay, might be you are trying to leave your practice and in future the client might have offered you a employment, and if you report anything about the client now, he might reject the future employment of you. Got it? So that is the self interest threat. Any doubt? No, right? Shall I move to the next threat? So the next threat is self review threat. What is this self review threat? For example, we have already discussed that auditor should not prepare financial statements, right, if he is auditing the client. Now what happens if auditor prepares the financial statements and he only audits the financial statements? Which type of threat will be created? Auditor has prepared the financial statements and he only auditing the financial statements. Self review threat. How? Because his work only he is reviewing, so self review threat will occur. What is wrong if self review threat occurs? If at all there are any mistakes, he cannot report those mistakes. What the client will say? You only prepared them, na? Client will say, right? So auditor, that's the reason why auditor should never do any executory functions in the client's business. He should always be at the reviewing function, verification function. Okay, if he does executive functions, this self review threat occurs. Okay, see, self review threat, it occurs during a review of any judgment or conclusion that is reached in a previous audit or non-audit engagement, or when a member of audit team was previously a director or a senior employee of the client. See the last line, what they are saying, member of the audit team. Now audit, will it be done only by the auditor? No, he will be having his team, right? Based on size of the client, the team size will depend. Now one of the person in this audit team has previously worked as either CEO or director, or worked at some higher management level of the client whom the auditor is auditing. Now in this situation, this person who is in the engagement team might have done some works in the client in his position as a CEO or in his position as a managing director or whatever the position might be. Now if he is again in the engagement team member, it will arise a situation that he might review his own work that he has done in the past. Understood? Got it? So this also might create a self review threat. See, self, this threat you should not check only for the auditor, even for the engagement team also you should check all these threats, and even the independence should be checked for all these engagement team also. Not, it is not sufficient if just the auditor is independent, even the engagement team should also be independent. In fact, if you see in some CA firms, on an annual basis, from all the employees, that is the articles, the paid assistants, they will ask to fill a particular form. In that form they have to write down in what are all the companies in which they have invested. Okay, and if they are having any interest in the clients of the firm, they have to disclose it, so that the firm will take care that those people will not be included in the engagement team of that particular client to audit that particular client. Okay, this mechanism will be there in some large CA firms. Okay, so all this is to avoid the independence, avoid the threats to independence. Got it? See, example, auditor having recently been a director or senior officer of the company, or auditor perform services that are themselves subject matter of audit. Example, we have already discussed. What could be the example for this point? Once read that second point, what could be the example for that second point? Auditor performs services that are themselves subject matter of audit. Preparing financial statements, right? Next, another example could be helping the client to design and implement internal controls. In the organization, there should be internal controls. Now, for implementing internal controls, client has taken the help of auditor. Now, during the audit, we have discussed that auditor will review internal controls. This will also create a situation that he is reviewing his own work. Got it? Shall I move to next slide? So, the first threat was self-interested. Second threat, self-review threat. What are the 5 fundamental principles? Professional competence, professional behavior, right? These are the 5 fundamental principles, including independence. Okay. Next threat to independence, which is advocacy threat. Advocacy. What is the meaning of this term advocacy? You will call advocate, right? Who is an advocate? That is the profession, but actually if you see the meaning of advocate, the person who will talk on behalf of you, means he is advocating you, right? He is promoting you in a particular case. Now, if auditor advocates any client, that means if he promotes any client, let's say for example, now there is a particular company which is listing its shares on stock market. Now, auditor, he has promoted shares of the company. He has told various people that you invest in the shares of so and so company which is going to list its shares on the stock market. Here what he has done, he has advocated the shares of so and so company. Now, if he advocates or if he promotes to the company, promotes the company to such an extent, then a situation will create where he cannot report the frauds or the misstatements that the company does, because he only told various investors to invest in so and so company, and he is acting as auditor of that company. Now, if the company books losses, or if company promotes, if a company commits the frauds, and if he reports them, the people to whom he has advocated, they will question himself, they will question the auditor, right? So auditor should never advocate his client. Okay, advocacy means promoting or taking side of client is known as advocacy. Okay, so this might create advocacy threat. So advocating the client will make you to lose the independence. Got it? See, all these threats we are discussing is the situations in which you might lose the independence, whether it might be self-interest, whether it might be self-review, advocacy. In all these situations, you are losing your independence. Got it? advocacy threats occur when auditor promotes or is perceived to promote. Perceived means he appears to promote, okay, whether he actually promotes or he appears to promote a client's opinion to a point where people may believe that objectivity is getting compromised. Okay, the auditor has promoted the client to such an extent that the people who are seeing their relationship are feeling that the auditor has lost his objectivity. That means taking decision based on facts, this ability has been lost by the auditor, because let's say it is being clearly appearing by seeing the company that company is not performing good, or company financial situation is not good, but even though the auditor he might be promoting the company. Now by anyone who is observing the company, they know that the company is not performing well, but you are advocating the same company. In this situation, that third person might feel that you have lost your objectivity. Why you have lost your objectivity? Because without giving any importance to the actual facts, you are going on saying that the client is that, the client is this, it is doing very good, right? So all these things you are saying to such an extent that people started to feel that you have lost your objectivity. Got it? Understood? Hmm? Next, so that is advocacy threat. Next threat, familiarity threat. What is this familiarity threat? Just now I have recently I have given an example. Familiarity means auditor is auditing the company for the last 20 years. He has developed a relationship with the client. That means he already know the client very much. There is a bond between them. So this will create familiarity threat between auditor and the client. Okay, because of this, see, if you know a person for a long time, whatever the wrongs that he commits, you will consider them as good only, because whether even though the person is a criminal, if he is your friend, you will not feel that he is committing wrong if you have developed a relationship with that person, right? So this long relationship between auditor and client can create a familiarity threat. Got it? See, familiarity threats occur when auditors from relationships with the client where they end up being too sympathetic to the client's interest. Okay, you start being very much attached, very much sympathetic to the actions, whatever actions that the client does, because of the familiarity that you have developed with your client. Got it? So what are the first four threats that we have discussed till now? Advocacy threat, familiarity threat, and the final threat is the intimidation threat. Intimidation means the client is fearing you. Okay, like if you give modified opinion on my financial statements, I will remove you as a auditor. Like this the client is saying. Okay, so he is intimidating you. Intimidation means making the other person to fear. Okay, so intimidation threat also makes you to lose the independence. Okay, or another situation, you are recently qualified as a chartered accountant. Okay, you are just having experience of either 6 months or one year as a chartered accountant. You are a recently qualified chartered accountant. You are auditing a huge company that is being in existence for last 30 years or 40 years. The people working over there are very much experienced. They have been following these accounting standards, Indian accounting standards, whatever applicable to them, for a from past lot of time. So now a particular accounting treatment, they have done it in a particular manner, and you are saying that no, you should not do that particular accounting treatment in that manner, you should do it in a different manner. You are saying that. Now here what will happen is, the client will say, I have been doing this from the past 10 years, none of them have questioned. You just qualified, you have experience of just 1 year. So if you if the client starts comparing in this fashion, it also creates a intimidation threat on you. Okay, you start feeling that you are lower than the client. Okay, so you will agree with the client because client has been doing it from the past so many years. So you will start agreeing with the client because of that situation. That is also a intimidation threat. Got it? So from now onwards, I'll move to the book. We'll discuss these things from the book, and we'll also solve question and answers. See, whenever you need a break, tell me. We'll take a break. Okay. We'll just quickly go through the content that we have discussed. Before that, we'll see that intimidation threat. That is not there in the PPT, right? Okay, we'll come from beginning. So chapter number 2, it is ethics and terms of audit engagement. Here there is some printing mistake, I'll correct it. Okay, the name of the chapter I'll change it. Now, meaning of ethics, it is a state of mind. The term ethics means moral principles which govern person's behavior or his conducting of an activity. Ethics is something which comes from individual intrinsically. Intrinsically means from within. If you have seen a wallet on the road, it randomly comes to you whether to return it or keep it with you. So this comes intrinsically. Okay, within, from the person it comes. Next, it has to be inculcated in the habit and the temperament of an individual, so that there is an overall culture of ethics, and it is a state of mind to act and perform in accordance with moral principles. Now, need for professional ethics. What is the need for professional ethics for chartered accountants? Let us see that. Requirement of ethics in profession of auditing is manifold. Manifold means there are many reasons why the ethics is required in the profession of a chartered accountancy. It is due to the reason that society in general, governments, clients, taxing authorities, employees, investors, business and financial community in particular have reposed tremendous trust in services rendered by a chartered accountant, right? All these people, all these stakeholders, they trust on the service that a chartered accountant provides. Now, to keep that trust as it is, to continue that trust as it is, ethics is very much important, right? If you don't follow the ethics, if you lose your ethics, the people who are believing you also start not to believe you, right? The purpose of assurance engagement is to enhance confidence. This we have discussed in the previous chapter, right, of the intended users. Therefore, users need to trust the person who is providing such services, right? If user has to trust the service that you provide, first of all he should have trust in you, right? Only if he has trust in you, he can trust the services that you provide, right? Next, the respect and confidence enjoyed by a profession to a great extent is dependent on the strictness and scrupulousness. Scrupulous is also another term for being strict, okay, which with such ethics are adhered by the self discipline. That is the reason why, if you see, if you read the code of ethics, they will be very much strict. At your CA final, you will read, okay, they will say that you should not advertise your CA practice, you should not promote your CA practice, okay, clients should come to you based on your experience and based on your knowledge, okay. Like this, there are very strict rules with respect to the CA profession that you have to follow, okay. If you go into the practice, the rules are even more stricter, okay. The strictness is to uphold, to maintain that trust in the society, okay. Next, ICAI has issued code of ethics. A chartered accountant, either in practice or in service, service means employment, right? If you do practice, you will call yourself as chartered accountant in practice. If you are in employment, you will call yourself as chartered accountant in service, right? Has to abide by the ethical behaviors. Next, any deviation from the ethical responsibilities brings disciplinary mechanism. I told you na, if you don't follow ethics, there is a disciplinary mechanism in the institute. As per that disciplinary mechanism, you will be punished. What will be punishment? Like imposing some penalty. The penalty is of actually based on the severity of the issue. They will impose the penalty, and they will also remove your name from the register of members, okay. What will happen if they remove your name from the register of members? You cannot do practice, you cannot tell yourself as a chartered accountant, okay. That much serious punishment will be there if you don't comply with ethics. Got it? Against the CS, which may result into fines, suspension of membership, etc. Got it? Next, principle based approach versus rule based approach. We have already discussed this, right? What is meant by a principle based approach? In the principle based approach, you will try to comply with the spirit of the ethics, okay. The core principle you will try to comply. Whatever the rule might be, you will try to read between the lines, okay. You will not just stick on to meaning of the rule, you will try to understand the purpose of the rule, and you will try to achieve that purpose, okay. So that is known as complying with spirit of the rule. Got it? It requires accountants to exercise professional judgment. Obviously, if you follow the ethics through this principle based approach, you have to exercise certain professional judgment. for complying the ethics in every situation based upon their professional knowledge, skill and expertise. Next, rule based approach. Rule based approach to ethics strictly follows clearly established rules, and it may lead to a narrow outlook. Here there is not much scope for you to understand the underlying intention of the rule. Okay, you will just follow whatever the rule is. Okay, and spirit of ethics may be overlooked while strictly adhering to the rules. Further, rule based approach is something rigid. This is not flexible, right? Rule based approach is not flexible when compared to the principle based approach. In principle based approach, you can take the decision which is flexible based on the circumstances, but in case of rule based approach, it is very rigid. Okay, whatever is there you will follow, as it may not be possible to deal with every practical situation relying upon rules. Got it? Example, the physical inventory verification example is that I have listed here. I have given it here. You can go through that. So, question number 7. We will solve the question number 7. Yeah, this is basically a direct question. I guess you can go through this. They are asking, briefly outline how principle based approach differs from rule based approach. Straight away question, right? You can just write down what is principle based and rule based. Next, fundamental principles of professional ethics. There are 5 fundamental principles. The fundamental principles of ethics establish standard of behavior expected of a professional accountant. What are these 5 fundamental principles? First one, integrity. What is meant by integrity? It means being straightforward and honest in all professional and business relationships. And a professional accountant shall not knowingly be associated with reports, returns, communications or other information where the accountant believes that the information contains materially false or misleading statement. Okay, you should not associate yourself with any statement or any certificate or any return that you feels contains a misstatement or a wrong information. Got it? That is integrity. Next, objectivity. Objectivity requires an auditor not to compromise professional judgment because of bias, conflict of interest or undue influence of others. It requires that professional accountant shall not undertake professional activity if a circumstance or a relationship unduly influences the accountant's professional judgment regarding the activity. The same point that is discussed in A, he has presented it in a different manner. That's it, right? Next, professional competence and due care. Professional competence means you should have all the knowledge that is required for discharging the engagement that you have taken up, right? See, principle of professional competence and due care requires an accountant to attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional services. Got it? And next, due care or diligence includes responsibility to act carefully, thoroughly and on a timely basis in accordance with requirements of the assignment. Whatever the work that you are doing, you should do it with a 100% attention. That is due care or acting carefully meant by. Got it? Next, Confidentiality. Confidentiality principle requires professional accountant to respect confidentiality of the information that is acquired as a result of a professional or business relationships. You should maintain confidentiality. However, there are certain exceptions to it. There are three exceptions we have discussed. What are those three exceptions? First exception, you can disclose the information if it is required by law, or when it is permitted by law and authorized by the client or employee. Okay, client or employee has given you permission to disclose the information, then you can disclose it. Third exception, there is a professional duty or right to disclose when not prohibited by law. The example for this we have discussed is when requested by peer reviewer, NFRA, National Financial Reporting Authority. Okay, that there the on auditor there is a professional duty in those situations to disclose the information, because without disclosing the information, the respective peer reviewer, he cannot review the audit that the auditor has done, right? So there is naturally a professional duty on the auditor to disclose the information for that particular purpose of peer review or review by a NFRA. Got it? Next, professional behavior. It requires an accountant to comply with relevant laws and regulations and avoid any conduct that accountant knows or should know might discredit the profession. Okay. Now we'll see the question and answers. Is it okay with the speed that I am reading the book, or should I little bit increase the speed or reduce the speed? Is it fine? Yeah. So now we'll go to questions. So question number 1. CAP Suryakantam has conducted audit of accounts of an entity for a particular year. ICAI has issued a letter to him relating to certain matters concerning audit. He didn't even bother to reply to the letter despite reminders. Discuss which fundamental principle governing professional ethics is disregarded by him. Now, here the ICAI has asked the respective chartered accountant CA Suryakantam to furnish certain information with respect to the audit that she has done, but she didn't responded to that. She took it light. So here, which fundamental principle has not been followed by her? You're seeing there and telling, or okay, by comparing you can, yeah. So here in professional behavior, what we have seen, you need to comply with all the laws and regulations, right? So here the, if you see in CA Act, there is a specific point says that chartered accountant, he should respond to the information that has been asked by the institute. Now, if you don't respond to the information asked by the institute, it means that you are not complying with CA Act. So it means that you are not behaving professionally. So here she is uh, compromising professional behavior. The fundamental principle that she is not following is professional behavior. Got it? Next, question number 2. A chartered accountant in practice issued a certificate showing original cost of plant I'll cover the answer and I'll just read the question. Okay, showing original cost of plant and machinery installed in premises of client for 9 crore to save some regulatory fee for his client. However, original cost of plant and machinery was 15 crore as per records of client. Which fundamental principle governing professional ethics is violated in this case? See, actual value of machinery is 15 crores, but in the report that CA is issuing, he shown as 9 crores. Why? To reduce certain government fee. So in this situation, he is not reporting the correct amount. That is, he is not truthful. If he is not truthful, integrity, right? The fundamental principle of integrity is not being followed by him, right? Integrity is being compromised by him. So integrity requires an accountant to be straightforward and honest, but in this situation, by reporting a wrong amount, he has lost his integrity. Got it? Next question, you have that PDF, right? Concise book PDF. Can you see the next question of that concept? I guess question number 11, 11, 12. Yeah. Question number 11. If you see this question, it is asked in May 24 examination. Let's see. A professional accountant is expected to comply with the fundamental principles of professional ethics at all the times. Explain which fundamental principle governing professional ethics is violated in the following situations. He has given you 3 situations and asking you to find out which fundamental principle is compromised in each of these situations. Let's read the first situation. A chartered accountant in practice accepted the appointment as an auditor of a firm in which his sister was a partner. Now, here, what fundamental principle he will lose or he will not be able to comply? Yes, because his sister has employed there, he cannot take decisions objectively, right? What happens if he cannot take decisions objectively? Actually, why he is not able to take decisions objectively? Because there might be a chance that client might remove his sister or something like that, right? Because of that, he might lose his objectivity. Hmm. Next, a chartered accountant in practice was approached by his friend to seek some insider information about a company which was a client of the chartered accountant. He could not refuse his friend's request. Confidentiality, right? Insider information means, see, the information that is not known to others. Basically, in the terms of stock market, the information that is not yet released to the public will be known as insider information. Based on the insider information, the people will try to make profits in the stock market. Okay, actually it is crime as per SEBI Act to trade based on the insider information. Okay, next, a chartered accountant in practice failed to inform his client about the change in laws applicable to his client. There is certain change in the law which is applicable to the client. Competence and due care, because professional competence says that the chartered accountant should have all the knowledge about laws and regulations or the skills that are required for discharging. Here, a change of law has occurred and he has not disclosed it to the client. So professional competence is not followed by him. So you got 4 marks, right? Next, question number 12. This is asked in September 24 examination. Next, CAP is a professional accountant in service. In terms of employment and professional relationships with the employer, he has to be alert to the possibility of inadvertent disclosure of any information outside the employing organization. However, in view of disclosure required by law, CAP had to divulge the information. Divulge means has to provide the information and documents as evidence in course of legal proceedings. Whether CAP has violated any fundamental principle governing the professional ethics in this case. Why? It comes under exception, right? So you need to present this answer. First of all, you should write what is meant by confidentiality, and chartered accountant must comply with the confidentiality, and in the following exceptional situations he need not comply with confidentiality, he can disclose the information, and conclude that in the given question it falls under so and so exception, thereby there is no non-compliance with any of the fundamental principle by CAP. Got it? 14. Yeah, this is asked in Jan 25 examination. If you see from this chapter, every attempt they are asking one question, right? See, identify and explain the fundamental principles being referred to in the following cases. Again, they have given 2 cases and they are asking the applicable one. See, professional accountants should act diligently and in accordance with the applicable technical and professional standards while providing professional services. What is this? Where it is discussed, where this point is discussed? You should, yeah, professional competence, right? You should act diligently, that means due care, and in accordance with applicable technical and professional standards, that means laws and regulation, right? While providing professional service, which is professional competence and due care. Next, a professional accountant shall not knowingly be associated with reports where he believes that the information contains materially false or misleading statement. Integrity, because integrity says that you should be truthful, you should be straightforward. Now if you associate yourself with any report or document that contains false information, it means that you are certifying a false information, so you are losing integrity. Got it? That's it, right? Next, independence. Independence implies that judgment of a person is not subordinate to the wishes or directions of another person who might have engaged him. Independence is a condition of mind as well as personal character and should not be confused with superficial and visible standards of independence. That means he is trying to say that it is not sufficient if you just be independent in appearance, you should also be independent in mind, okay, which are sometimes imposed by law. There are two interlinked perspectives of independence of auditors. Firstly, independence of mind. The state of mind that permits the provision of an opinion without being affected by any influences that compromise professional judgment, allowing an individual to act with integrity and exercise objectivity and professional skepticism. I'll explain what is meant by professional skepticism. Okay. Next, independence in appearance. The avoidance of facts and circumstances that are so significant that a reasonable and informed third party having knowledge of all relevant information, including any safeguards applied, would reasonably be conclude a firm's or a member of assurance team integrity, objectivity or professional skepticism had been compromised. That means any third party who is having knowledge with respect to these aspects of independence, integrity, objectivity, he by just seeing the situation, he can understand that there is no independence in this situation, or there is a independence in this situation. Like this, a reasonable informed third party is able to observe. That is known as independence in appearance. Okay, whereas independence in mind cannot be observed by any reasonable third party. Okay, got it? Independence of auditor has not only to exist in fact but also appear to so exist to all reasonable persons. Okay, that means all in all, both of this is required. Okay, you should be independent in mind and also in appearance. It is not sufficient just to be independent in appearance. It is very much important that you should also be independent in mind. Okay, next, threats to the independence. Now, threats are those aspects that prevent auditor from being independent. Mitigating actions are those that reduce those threats. Now, there is a threat, you cannot keep silent. If there is a threat, you will try to reduce that threat. So the action that you will take to reduce that threat is known as mitigating action. Okay, so mitigating actions are those actions that reduce the threat. Following are the threats. First of all, we will see the 5 threats that we have discussed. Afterwards, we will see the mitigating actions or the safeguards to remove those threats. So the first threat is self-interest threat. Self-interest threat occur when an auditing firm, its partner or associate could benefit from a financial interest in an audit client. Examples include direct financial interest, loan or guarantee to or from the client, undue dependence on client's fees, close business relationship, potential employment, contingent fees. This contingent fees we haven't discussed, right? What is meant by contingent fees? Yeah, that means for doing a particular service, you haven't fixed a fees. The fee that the client will pay you will depend on results of the engagement. That means client can say you, if you find these many misstatements, I will give this much amount of fees. So in this, the fee is linked to the amount of misstatements. In case of audit, the fee should never be a contingent fee. There should be a fixed fees. Okay, this has actually been prescribed in the code of ethics that the institute has issued. If you accept contingent fee, it will create a self-interest threat on you, because it might not always be that if you find more misstatements, I will give more fees. It will not be always like that. Sometimes the client might say that if you find more misstatements, I will give less fees. In this situation, what you will try to do? You will try to find lesser misstatements so that your fee will be increased, right? So institute says that you should never accept contingent fees. Okay, but there are certain exceptions in which you can accept in certain types of engagement. that you don't have it in your syllabus, okay, but you just remember that there are certain exceptions to this rule also. Next, self review threat. Self review threats occur when during a review of any engagement or conclusion reached in a previous audit or non audit engagement, or when a member of audit team was previously a director or senior employee of the client. This entire point we have discussed even in the PPT also. Now, some of the instances where the threats come into play. First example, when auditor having recently been director or senior officer of the company, I have explained this. Next, when auditor performs services that are themselves subject matter of audit, right? Next, advocacy threat. Now, in case of advocacy threat, auditor promotes or is perceived to promote a client's opinion to a point where people may believe that objectivity is getting compromised. Example, when auditor deals with shares or securities of the audited company. I have told you this example, right? The same example I have given it here. Next, familiarity threat. Familiarity threat occurs when auditors form relationships with the client. How this relationship will come? Because of the duration of time for which the auditor is dealing with the client. So, some of the examples: close relative of audit team working in a senior position of the client company. Okay, one of the close relative of auditor is managing director of the company or CEO of the company. That means obviously there is a familiarity between auditor and the company. Next, former partner of the audit firm being a director or senior employee of the client. Former partner means previously the person was partner of our CA firm, but currently he resigned and he started his own company, and for that company our audit firm is doing audit. Now, in this situation, since that managing director is a former partner of our firm, there will obviously be a relationship already developed, right? Next, long association between specific auditors and their specific client counterparts. That is, duration of time for which you have been dealing with them. That also will create a familiarity threat. Next, acceptance of significant gifts or hospitality. See, no one will give you gifts or no one will offer you some favor until and unless you are having a kind of bond with those people, right? So if you are accepting gifts, if you are accepting some hospitality means, let's say for example, you are traveling with your family for some foreign country and client is bearing the expenses of that trip, that is known as providing hospitality. So this also will create familiarity threat. Basically these things will happen only if there is a familiarity threat. Got it? Now, in order to avoid this familiarity threat, the Companies Act itself is having a provision. Basically, as per Companies Act, in case of sole proprietor, the chartered accountant, he can do the practice either as a sole proprietor or as a partnership firm, right? Now, if you are a sole proprietor, you can act as auditor of a company for a maximum period of 5 years, and after completing 5 years you have to resign and in your place some other auditor has to be appointed. So after completing a tenure of 5 years, you cannot act as auditor of the same company for another 5 years. That is known as a sleeping period. We will call this concept as a rotation of auditors. Okay, however this is not applicable to all the companies. There is certain threshold prescribed. If the company crosses that threshold, this concept of rotation of auditor gets applicable to the company. In case of CA firm is a partnership firm, then instead of 5 years it can act as auditor of the company for a period of 10 years. Okay, after completing the 10 years, for again 5 years it should not act as auditor of same company. The sleeping period is 5 years. Okay, so this is one of the safeguard, you can say. Okay, if you associate with the company for a long duration of time, familiarity threat will get. To reduce that familiarity threat, the safeguard that the Companies Act itself has implemented is rotation of auditors. Understood? Any doubt? Yeah. See, provisions in the Companies Act 2013 regarding rotation of auditors mainly address these very familiarity threats. Such provisions prescribe that auditor is rotated after a certain number of years, so that auditors do not become too familiar with the clients. Okay. Next, the final one, intimidation threat. Intimidation threat occurs when auditors are deterred from acting objectively with an adequate degree of professional skepticism. Basically, these could happen because of threat of replacement. Okay, client is threatening the auditor that I will replace you, I will appoint some other auditor in your place. Okay, this is a kind of intimidation threat. Over disagreements with the application of accounting principles, or pressure to disproportionately reduce work in response to reduced audit fee, or being threatened with litigation. See, disproportionately reduce work in response to reduced audit fees means basically the audit service that you provide doesn't depend on the amount of audit fee that you are accepting. Okay, whether you are accepting 10 rupees as a audit fee or 1 lakh rupee as a audit fee, you will be responsible for the opinion that you have given. So you have to do complete audit. Okay, you cannot say that client has given me only half fees, so I will do only half audit. That is not possible, because at the end of the day you are giving the opinion, you are signing the financial statements of the company. If there are any misstatements, you will be responsible. Now in this is a situation. Now here client saying that I will give only half fee, you do only half audit. Like this, client is forcing the auditor to reduce the audit procedures that he is performing, saying that I will give only some fee, you do only some audit, so that you will not, the client's interest over here is that the auditor will not find misstatements, auditor will not find frauds that has been committed by the client. So client is forcing the auditor to reduce his audit work. This is also one of the example of which threat? Intimidation threat. Got it? Such threats attempt to intimidate auditors to deter them from acting objectively. Okay, in case of intimidation threat, the auditor loses his ability to act objectively. So we'll read the questions. Question number 3. So this question number 3, it is also asked in RTP and a study material question. Let's see. CA Raman Gupta is offered appointment as auditor of a company. One of his distant uncles held some shares in the same company. Okay, holding of such shares by a distant relative is not prohibited under the provisions of law, nor does it affect his independence. His uncle can hold the shares, it will not prohibit the independence of auditor. But let's see what happened. Before he could accept the appointment, he received unfortunate news of death of his uncle, who had died without any children. Now he come to know that he was nominee of these shares having substantial value. It landed him in a tricky situation. What should be proper course of action for him? Have you understood the question? There is his uncle who is holding shares of a particular company, and for the same company the auditor is also doing the audit. Now if uncle holds the shares, that is no problem, but the problem has arisen when his uncle has died and his uncle is having no children, and the shares are being held in the as a nominee, the auditor is being appointed by his uncle. So when his uncle dies, automatically the shares get transferred into name of the auditor, right? So now he is holding the shares and he is also in the position of auditor of the company. This will create self interest threat. Now will you keep silent that self interest threat is created, or you will try to eliminate it? In this situation, minimizing it is not correct solution or not possible. You have to eliminate it. How you will eliminate it? Yeah, by selling off the shares or by transferring the shares to someone, you can eliminate this threat. Got it? That is the answer you have to write over there. Next, see, you need to mention first of all what is meant by a self interest threat and how self interest threat has arisen here, and to remove that self interest threat, what you have to do. These three aspects you need to cover in your answer. Next, question number 4. A chartered accountant receives about 40% of his total fees from a single client. Discuss how it could affect independence of chartered accountant as auditor of his client. What are such types of threats referred to as? So again, here it creates self interest threat. Next, question number 5, right? Yeah. Next, CA Murali Madhavan provides accounting and bookkeeping services to a leading NGO engaged in environmental protection work. He is also offered audit of the accounts of NGO. He is maintaining books of accounts and he is also offered accounts of NGO. This will create self review threat, right? Now identify and discuss what kind of threat to independence may be involved in accepting such engagement. Self review threat, you have to write the same. Before writing that, you should just explain few points about independence and how independence will be lost because of self review threat. You need to explain. Okay, what is a self review threat, you need to explain. Next, question number 10. Familiarity threats are self-evident and occur when auditors form relationships with the client where they end up being too sympathetic to the client's interest. Explain. They are basically asking you to explain about familiarity threat, and you should also give some examples of the familiarity threat. Okay. 13. This is asked in Jan 25. See, CAH is a managing partner of HK and Company, a chartered accountant firm having registered office at Delhi, with the annual task of reviewing whether any threats to independence is observed in the firm. CAH noted down the following observations received from the staff and partners of the firm for the financial year 2023 and 24. So basically he is giving certain situations and asking you which threat will be there in such situation. Okay, let us read situation wise. Point number A. CAJ, partner of the firm, performed statutory audit as well as non-audit engagement for measures take away private limited. Now, if you do statutory audit as well as some non-statutory audit work, this will create non-statutory audit means any work, non-statutory work means any work like preparing financial statements or helping the client to self review threat, helping the client to implement internal controls, all that comes under non statutory audit. Those types of works comes under non statutory audit types of works. So this will create self review threat. Next, CAM, partner of the firm who has done income tax audit of Mrs. Happy Associate, wherein CAM has material, significant, indirect financial interest, self interest threat. The cost of air travel and stay accommodation of family members of audit team for audit of Chennai was borne by the client stationed at Chennai. How could it be intimidation? Familiarity threat, because here auditor is going for a audit of the client and the client is situated in Chennai. Obviously the client, he can bear travel expenses of auditor, but in this situation he is also bearing travel expenses of family of the auditor. So in which situation the client will bear the expenses or provide hospitality to the family of the auditor? If at all there is a proper relationship, if there is a bond already built between the auditor and the client, then client will be ready to bear the expenses of family also, right? So this will create familiarity threat. That's it. Whereas in this situation it is sufficient, if you just see, if you can see how the answer is presented here in a tabular column, just you will write the situation and which type of thread that is. Okay, because in the question he is just asking you to identify which type of threat. If he also asks you to explain that threat, that's the reason why I told you you have to read the question carefully. Okay, if in the question it is asked that explain that threat also, then you should explain that threat. Okay, next, one of the clients, Mrs. Chalk Limited, threatened to replace them as auditors because the audit team insisted to make provision for expected credit loss, which the company was not willing to provide. Intimidation threat, right? Because the client is threatening the auditor to provide for a particular accounting treatment or particular provision, you can say. Okay, this expected credit loss is a method that will be used as per Indian accounting standards for recognizing bad debts. The for provision with respect to debtors, you will use that expected credit loss method. You will also use that method for recognizing loss from the investments. Okay, that you will read at the final level. You'll know what is meant by expected loss at the final level. Here for the purpose of question you have to just assume that there is a particular accounting treatment which client not agreeing to do but auditor is asking to do. Next, CAN, partner of the firm who audited Mrs. NM Private Limited, became arbitrator. Do you know what is meant by an arbitrator? Similar to court. Yeah, I'll tell you. CAN, partner of the firm who audited Mrs. NM Private Limited, became arbitrator for dispute between Mrs. NM Private Limited and one of its vendors. Now, what threat will occur here? advocacy threat. See, if there is any dispute between the two parties, the one of the way to resolve that dispute is you can go to the court. If you go to the court and file a case in the court, it will take longer time to resolve the dispute. So another option available is arbitration, wherein in case of this arbitration, a respectable party who is agreed by both the disputed parties will be appointed as a arbitrator or like a judge, and these two people who is having dispute will tell their dispute to the arbitrator and he will give the judgment. So whatever the arbitrator says, they have to follow this. So in this situation, our auditor is acting as a arbitrator. So if you are auditing the client, you should not act as arbitrator for the dispute in which the client is involved. If you act as an arbitrator, it means that you are advocating the client. It will create a advocacy threat. Got it? CAN accepted the assignment of tax audit on behalf of firm of TRF Industries. Management agreed to pay him contingent fee for tax audit. Can you accept contingent fee? If you accept contingent fee, that creates self-interest threat, right? So that's it. Those are the questions. Okay. Now, if there are threats to independence, the options available with you to deal with the threat or to continue as it is, which you will never do, right? You will never continue as it is with the threat. The second option is to reduce, sorry, the second option is you will try to eliminate the threat. Eliminate means completely remove, right? If complete removal of threat is not possible, you will at least try to reduce the threat to acceptable level. To acceptable level. Now you are not able to eliminate the threat, and also you are not able to reduce the threat to an acceptable level. These two situations you are not able to do. Then what is the action that you will perform? If these two are not possible, then what will you do? You should not continue as it is. You will withdraw from the engagement. If you know about these threats before accepting the engagement itself, and you have a clarity that you cannot eliminate these threats and you cannot reduce them, first of all you will not accept the engagement. If at all after accepting the engagement you came to know that I will not be able to eliminate this threat or I will not be able to reduce this threat, then you have to withdraw from the engagement. Got it? So for elimination, what kind of action you can do? Let's say for example, there is a self interest threat wherein you have invested in shares of the company. Now you sell the shares, that is completely remove the situation. right? So the action to eliminate the threat is completely remove the situation. Now, to reduce the threat, let's say there is no possibility to eliminate it, like you are, there is no buyer in the market to buy the shares that you are selling. See, if you want to sell the shares, there should be a buyer. There is no buyer ready to buy the shares, then yeah, that is known as safeguard. Okay, you will reduce the threat to an acceptable level by implementing safeguards. Got it? So safeguards to independence. Safeguards are actions individually or in combination that professional accountant takes that effectively reduce threats to comply with the fundamental principles to an acceptable level. Okay, by implementing safeguards you can reduce the threat to acceptable level. Got it? What is an acceptable level? That depends on professional judgment of the auditor. Okay, based on circumstances, case to case basis, the auditor has to decide what will be a acceptable level. Okay, see, to address the issue, the following guiding principles are to be applied. For the public to have confidence in the quality of the audit, it is essential that auditors should always be and appear to be independent of the entities that they are auditing. This is the basic rule wherein the users expect that auditor should be independent of the entity that he is auditing. This is the basic expectation of users, right? Now, before taking on any work, auditor must conscientiously, okay, conscientiously, that means carefully consider whether it involves threats to his independence. Okay, since users are expecting the auditor to be independent, so auditor while accepting any work, he should carefully determine whether there will be any you know, any threat to his independence if he accepts this engagement. Now, when such threats exist, okay, during the auditor's determination, if he finds that any such threat exists, any such threat to independence exists, the auditor should either desist from the task. Desist means not to accept the task, or eliminate the threat, or at the very least put in place safeguards which reduce the threat to an acceptable level. Got it? All such safeguard measures need to be recorded in a form that can serve as evidence. Now, whatever the work you do, it needs to be supported by evidence. No evidence means no work. Okay, the authorities will consider that if there is no evidence is available, you have not done any work. Okay, because this is the service that we provide is not a materialistic one, right? You can't show your service. The only way to show your service is through evidence that you have gathered, right? So in this situation also, if there is any threat that has been faced, you have to properly record it, how you have faced the threat and what action you have taken to reduce that threat. It is not sufficient if you just reduce the threat, you should also document how you have reduced the threat. Okay, the importance of the documentation we will be seeing in essay 230, and importance of audit evidence we will be seeing in essay 500 series. Okay, Now, if the auditor is unable to fully implement credible and adequate safeguards, then he must not accept the work. Okay, before taking the work itself, auditor feels that he cannot reduce the threat or he cannot eliminate the threat, he should not accept the work. If after taking the work he comes to know that he cannot eliminate or he cannot reduce, then withdraw from the engagement. Okay, so that is with respect to safeguard. So the example for the safeguard I have given, the shares transfer. And if you want another example for the safeguard based on the threats, like we have also seen example as per Companies Act, rotation of auditor, that also you can consider as a safeguard, right? And if you see in case of self review threat, let's say there is a CA firm. Now this CA firm has got audit engagement from A Limited. Okay, and this CA firm has also got some other non audit engagement from A Limited. Now CA firm will be having 3 or 4 partners, CA who are qualified partners. Now in this situation the basic rule is, if you accept both the engagements, it will create self review threat. So to reduce this self review threat to some extent, what you can do, have you understood the situation? Other partner. Okay, the non audit engagement work can be done by one partner, audit engagement work can be done by another partner. So this way you can reduce threat to acceptable level by implementing safeguard. Got it? Now moving to professional skepticism. What is meant by professional skepticism? Just like independence is a quality that the auditor should have, and 5 fundamental principles that the auditor should follow, just like that even professional skepticism is also a quality that the auditor should have. Now professional skepticism, to put it simply, the quality of questioning mind. Whatever you find in the audit, you have to question it. Okay, let's say there is a sale invoice, the the date it has been written as some 15th June, something like that, whether the date is correct or not. Amount is written as something, whether it is correct or not. And it has been written that goods have been sold to so and so person, whether actually the goods have been sold. Accept check the goods outward register, whether the same person name is being written or not. So in the audit you have to question everything. So the quality of questioning everything, the technical term for that quality is professional skepticism. Got it? Now professional skepticism includes not only questioning mind, you will find various, or you will gather various evidences during the audit. You have to critically analyze those evidences, like the, let's say for example, for confirmation of debtors balance, you will obtain external confirmation. Now you have received external confirmation from the debtor. Now you should not just take this external confirmation and keep it in your audit file. You have to exercise your professional skepticism. That means you have to critically analyze this evidence that you have gathered, whether this has actually been received from that particular debtor only, or the client is manipulating me by sending this confirmation by client himself, and whether this external confirmation is actually signed by that particular debtor only. Like this you have to critically analyze the audit evidence that you gather. This also comes under professional skepticism. Got it? So if you see, professional skepticism refers to an attitude that includes questioning mind and being alert to conditions which may indicate possible misstatement. Okay, during the audit, you should be very much alert to each and every situation that you find, to check whether there could be any misstatement in that transaction, whether there could be any fraud in that transaction. So you should be very much attentive during the audit. The quality of being attentive also comes under this professional skepticism. So professional skepticism means three things. First one, questioning mind. Second one, being attentive. Third one, assessment, the critical assessment of audit evidence. These three qualities comes under professional skepticism. So auditor must always exercise this professional skepticism during the audit. Okay, so now if you see, till now we have been seeing about the qualities that the auditor should have, the the ethics that the auditor should comply. If you can list down all those things while doing the audit, first of all, auditor, he should comply with 5 fundamental principles, right? That integrity, objectivity, confidentiality, professional competence, due care, and professional behavior. All those 5 fundamental principles he needs to comply. Next, he should be independent, right? Next, he should exercise professional skepticism during the audit. Professional skepticism includes 3 qualities, and during the audit he should also exercise his professional judgment, that is the knowledge that he has gathered by studying various subjects and the experience that he has gathered, all that he has to apply during the audit, that is known as professional judgment. Got it? So you might confuse between professional skepticism and professional judgment. Okay, you clearly understand the difference between professional skepticism and professional judgment. Hope you understood the difference. Got it? Yeah. Now, it signifies that auditor has to remain alert forever. Okay, from the starting of the audit till the end of the audit, he should be alert. Professional skepticism includes being alert to certain situations. Examples they have given. Let us see. Audit evidence that contradicts other audit evidence obtained. See, in case of audit, for verifying a particular transaction or particular item, it is not that you have to obtain only one audit evidence. Based on the risk of that particular item, you can gather how many audit evidences you want. Let's say, for example, debtors, the same debtors. For debtors, the audit evidence, the basic internal audit evidence that will be available with you is at the time of making the sale invoice will be generated. So that sale invoice, all the sales made to a particular debtor will also act as a evidence for the debtor balance, provided you reduce the amount received from the debtor, right? From the sale invoice, if you reduce the amount, that shows the debtor balance. This is the internal evidence. Now, if you feel that based on the risk in the area of debtors, just this internal evidence is sufficient, you can just rely on that invoice itself. If you feel that the risk in the debtors is very high, just this internal evidence is not sufficient, then you will also go for external confirmation. Now, after getting the external confirmation, it is obvious that you will match external confirmation with the internal evidence that is available, right? So here you are being alert to check whether these two evidences are contradicting each other. They should not contradict, right? They should be same. The amount being received from the external confirmation and that is being shown in the invoices, it should match, right? So doing this procedure means that you are exercising professional skepticism. Got it? Next, information that brings into question the reliability of documents and responses to inquiries to be used as audit evidence. Reliability of the audit evidence, that means you will check whether actually it has been received from the debtor, actually it has been signed by the debtor, or management is trying to manipulate me, like in case of Satyam scam where they have fake fixed deposits. So you will checking for the reliability of the documentation also means that you are exercising your professional skepticism. Okay, so in case of Satyam scam, auditors failed to exercise professional skepticism. Got it? Next, conditions that may indicate possible fraud. Now see, in case of audit, during the entire audit, you should be alert to identify whether there is any fraud in this situation. This is very basic thing. Okay, during the entire audit, in each and every transaction, in each and every account balances, you should be alert to find if there is any fraud in that. Okay, next, circumstances that suggest need for audit procedures in addition to those required by SS. See, the standards on auditing, it is quite impossible even for standards also to prescribe each and every procedure that has to be done by the auditor. Based on the circumstances, auditor has to determine, apart from the procedures required by the standards, is there any requirement for me to do other procedures also. Okay, if at all there is any requirement based on the riskiness of the situation, auditor should also perform such other procedures which are not prescribed by standards to obtain the audit evidence. This is also known as exercising professional skepticism. Understand? These are some of the situations wherein you have to exercise professional skepticism. Next, maintaining professional skepticism throughout the audit is necessary if the auditor is to reduce risk of overlooking unusual transaction. Now you can ask me, sir, you are telling professional skepticism has to be maintained by the auditor throughout the audit. What happens if you don't maintain professional skepticism? There is a possibility that you might overlook certain unusual transactions. Like, let's say for example, at the end of the year, on 31st March, a sale transaction has been booked, which is a cash sale, and the amount of cash sale is huge than generally made by the entity, and the payment is not yet received. These are the situation. This is the situation present. Okay, payment not received, sale is a cash sale, and amount of sale is huge. This is unusual transaction, right? If you observe the entire financial year, this type of thing has never occurred. Okay, the sale of this much value, and that too cash sale, and that too at the end of the year. Generally, in case of companies, what happens is to adjust their books of accounts, most of the entries will be passed at the end of the year. Okay, in last 5 to 6 days of the March, they will pass adjustment entries. So the chance of frauds in the entries that are passed at the end of the year is more. Okay, so if you don't exercise professional skepticism, there is a chance that you might overlook certain unusual transactions. Okay, next, overgeneralizing when drawing conclusions from audit observations. See, if you don't exercise professional skepticism, there is a possibility that you might overgeneralize. That means, let's say for example, in case of audit, you will use sampling, right? Now, how you might overgeneralize if you don't exercise professional skepticism? Let's say there are 100 vouchers, the same example I have told you yesterday also. Now, of these 100 vouchers, you have taken sample of just 5 vouchers, and by performing audit procedures on these 5 vouchers, you haven't found any misstatements, no misstatements, zero misstatements. Now, based on this, you are coming to a conclusion that there will not be any misstatements even in this population also. This is example for overgeneralizing. Okay, just observing 5 invoices, you are coming to a conclusion that there will not be any misstatements in the entire invoices. So if you don't exercise professional skepticism, you might overgeneralize. Okay, next, using inappropriate assumptions in determining the nature, timing, and extent of audit procedures and evaluating the results thereof. What is this nature, timing, extent of audit procedures? I'll explain you in the coming standards. Okay, now here we'll understand what is inappropriate assumptions. Okay, if you don't exercise professional judgment, professional skepticism, how could you make these inappropriate assumptions? See, for example, okay, you have audited the entity for the last year. In the last year, as part of audit, you will verify internal controls. In the last year, you have verified internal controls with respect to, let's say, sales transaction. Okay, with respect to sales transaction, whatever the internal controls are there, you have verified them in the last year, and in last year you found that all the internal controls are working properly. This is about last year situation. Now, in the current year also, you are assuming, based on the last year verification, that current year also the internal controls will work properly only. So here you are taking inappropriate assumption without verifying. You are coming to assumption based on previous year's verification that internal controls in current year also will work properly only. So there is a chance of making this inappropriate assumptions if you don't exercise professional skepticism. Okay, so professional skepticism is very much important in order to avoid overgeneralization, in order to avoid inappropriate assumptions, in order to avoid overlooking of unusual transactions. Okay, so for all these, to avoid all these things, you have to maintain professional skepticism. Got it? We'll read these 3 questions and we'll wind up. Okay, in tomorrow's class we'll freshly start with essay 210. Question number 6. The auditors of a company have only relied upon management representation letter regarding treatment of certain tax matters under appeal by the company. The auditors have not carried out any other audit procedures to justify management's treatment of said tax matters under appeal in the financial statements. What is lacking on part of auditors in such a situation? Here they have just relied only on the representation letter that the management has given. They have not performed any other procedure from their side. They have not tried to gather any other evidence apart from the management representation letter. So here auditors lacked to exercise skepticism. So here you need to explain what is meant by a professional skepticism. Whenever you are writing about professional skepticism, you should write these 3 points. Okay, questioning mind, being alert, assessment of audit evidence. Okay, and you need to explain how in the current situation they have lacked professional skepticism. Okay, question number 8. How application of professional skepticism throughout audit is helpful in reducing the audit risk. The 3 points we have discussed now: overgeneralizing, overlooking, assumptions, inappropriate assumptions. So those 3 points you need to write down. Before, you should not straight away write those points. You should first of all explain what is professional skepticism, then go for that. Okay. Next, question number 9. Truthful Products Private Limited is engaged in trading stationery items. During the year 23-24, there was a huge fire in one storage location of the company, resulting in loss of inventories of 5 crore rupees. As a result, operations of the company were badly affected for about 2 months. Unfortunately, the insurance claim of company was rejected due to certain defects in the policy issued, and loss was booked by company in the year 23-24 itself. Okay, in the 23-24 itself, it has booked that loss occurred in the fire accident, because insurance company has not given the amount to it, so it has booked the loss. Now, there was no change in nature of business of company in relation to last year. The draft financial statements of company reflect the following information. For financial year 22-23, 23-24, revenue from operations is 80 lakhs or crores and 100 lakhs. Net profit 6 and 10. Okay. Now, CAD, who has been the statutory auditor for the past 3 years, has decided to rely upon same test of details as performed in the previous year. So he decided to rely on the same audit procedures. Here, test of detail, we will discuss that in essay 500 series. Okay, what is meant by test of detail? It is basically a audit procedure that you will perform. So he decided not to perform test of details in this year. I will use last year's test of details only. So obviously in the given situation he is lacking. Why? Because he decided to rely on the previous year's test of details only. He is he doesn't want to perform test of details again in the current year. So he is lacking professional skepticism. Okay, not assumptions related. Just that you are not willing to perform the procedures that you have performed in the previous year, that means that you are lacking professional skepticism. That nothing related to assumptions over here. So in this situation he lacks professional skepticism. You should explain these three, you know, things what will happen if you lack professional skepticism, and you should apply that to the current situation. Okay, instead of relying on the previous year's procedures, he should have performed the procedures again in the current year also. You should conclude that. Okay, so questions got completed, I guess, right? We'll wind up today's class, and tomorrow we'll start with essay 210. Okay.